And good evening. This is the Eye of the Storm podcast for the NASDAQ 100 and the S&P 500 for Sunday, October 9th, 2022. Friday's expiration was in line with the interpretation of the figures that came out, and that was our employment situation data. And that drove the market lower, and then it's picked up the speed. And to just revert back over to the technical picture, as I left it on Thursday, I had discussed that we were sitting right on an edge where if they accepted the number and ran with it, that we had the possibility of cleanly just making a run for a break above 11,720 to 50 and on up towards 12,000. As it turned out, they did not like the number. Obviously, we were there, we saw. And they drove the market lower. In fact, it pretty much truly wanted to break 11,000 and got as low as 11,043 before recovering into the close, which again was an expiration, which again took a fair swipe at the big tech titan stocks, which had been rallying up to this point. So they began, the market began to rally on October the 3rd and continued right up to last Friday, being October the 6th. So it rallied pretty strongly for 3 days in anticipation of what was being said about inflation and interest rates, et cetera, et cetera. More importantly, that level is technically and Elliott-wise, letting me put a minor wave 2 up at Friday's high, actually, and it came Friday during Globex. And it was exactly on the recent release of the employment data. And somebody hit the buy button. And it went up to the session highs, actually, at that time. And from there, just absolutely dropped by 50 to 100 points at a clip. It was easy to trade, but it was a very clear sign of what the number was being interpreted as. So just to drop for a moment into the whole mindset that I think oftentimes you've heard me speak about noise. And when I'm referring to noise, I have a particular mindset. And if I'm allowing different market analysts or somebody talking on CNBC or somebody contributing something that I'm reading up in the news, like for right now, I can read up and look and say there's a story that Elon Musk says nuclear war probability, and then you can go on to read it, how worried, and he's staying up all night worrying about nuclear war. It's like, okay. But that is distraction. That is noise. Maybe an important story. And obviously, the threat of nuclear annihilation is one open for discussion and sits out there on the table as to what degree or the severity or whatever. Now it's all just being punditry, sort of, that they're just giving it could be. Yes, of course, it could be. Does Russia have that capability? Of course they do. Do we believe that Vladimir Putin will shift and do something really silly? Everybody puts a big question mark on that one. There's those that want to go with the idea. It's like, well, he would know he would be destroyed. But maybe that's more important for him to end in a flurry, so to speak. In any case, that sits out there. Now, also on our inflation front, I had the great opportunity to actually do the food shopping. What I do when I go to the Safeway, for example, I'm picking up staples and things of that nature. And I have now watched as inflation has marched higher that initially, when all of this period really started to kick into gear, I was putting out about maybe $40 a week for both my spouse and I. And Then it went to 60, then it went to 80, then it went to 100, and on Saturday, it was 120. And gasoline, although they tell us is going to be coming down in the state of California, in some areas of the Bay Area where I live, it's this close, gas is above $7 a gallon. And here in the city, it is pretty cleanly above $6 a gallon. And so when you're sitting there thinking about, well, you guys are all thinking that the Fed's going to have to back off and the Fed's not going to be so strong, it's like, it doesn't take much than to just to stop and take a look at your specific area and what you spent last week and what you're spending this week. And as those prices, particularly the food prices, grocery prices, go up and up and up, that this is not something to take lightly, even if you make substantial amounts of money. We're going to get to a point where your wage inflation will not keep up with actual inflation. And therefore, interest rates will have to really move much quicker than they are. Again, just on that subject, the reason why interest rates go higher in periods of inflation is because they have to stop this money from the dollar and everything just kind of getting out of hand, getting out of their control. If the Federal Reserve and the Treasury is part of what their job is to keep a gauge and then keep inflation under pressure of not exploding. But with that same mind in mind, pressure, if you put it into a pressure cooker and you close that lid and you put it on a fire, it's going to take a while because it's a big pot and it's going to take a while for that water to boil and then to actually do the pressure. But eventually, if you're not careful, it'll blow the lid off. And that's kind of what can happen here. And we just saw a part of it in the UK and other parts of Europe, and they're not done. And in fact, I was told today, because I have friends in the Netherlands, because I lived there for a long time, that inflation in the Netherlands is 17%. So you think, well, we got it bad here. We're just hovering around 9. There are other places that are much, much worse. And just the natural gas problem, the gasoline, the oil, the whole shebang, and how all that is affecting people. So again, it is being felt around the world. And it is important just to kind of get an idea of, well, I can't really do anything about it, so I'm going to have to accept it. But what I can do is interpret it as to what will happen to corporate pricing. And how is it going to affect corporate America? Because that's really what we're going to bet on here, right? We're betting on that corporations continue to churn out these healthy products and healthy profits. Well, they may continue to churn out the healthy products, but they may not be able to sell as much as they thought at the price they want. So certain prices go up and certain prices don't. And right now, it just depends. And I don't think that even the higher prices on, say, for example, cars, used cars and new cars, I think that's also reaching a peak because it's not sustainable. In other words, it's like if interest rates are going up and I got to borrow the money to get the car, my whole cost just has escalated quite a bit. So a lot of things to think about when suddenly we're hearing, oh, well, the Fed's going to ease. Okay, what is really behind saying that? Trying to state a bullish position, trying to whatever? I was like, come on. How can that be when every single thing that I see and I go to tells me differently? What we do, we're the consumer, right? We go to the grocery store, we go to fill the gas in the car. We're paying for the gas that heats the house or the oil if you live in the East, believe it or not. So all of these things have an effect. And to believe that the Fed is going to back off of interest rates would be, that's when a crash would happen in my position and what I would think. So how are we going to filter this in? I'm going to have we're going to notice that we can continue to have a bullish or a more upside view that would cover us, but I want to start wrapping around until that larger situation, until our inflation and earnings and everything shows much stronger signs of bottoming besides, getting as low as maybe we are and thinking, well, that's got to be low enough. It's like, that's the misnomer. The way we think does not necessarily have to reflect what we trade. Because if you come in with that idea, you're going to put on trades that are going to balance that, and they could be losing trades. If you're a day trader, you can do both. You play the price action, you play what's trading in front of you. And often with the volatility, which now is going up again, then it can be very lucrative. But it's very fast, and it can be very confusing, and it gets crazy. So my counts right now continue to reflect that we are in a primary B wave down. So here we are back in the NASDAQ. We're in a primary C wave. Forgive me on that one, folks. Primary B wave is done. We're in a primary C wave down. That primary C wave will consist of 5 waves of intermediate degree, and they will be labeled 1, 2, 3, 4, 5. So here we have 1 and 2 in place. We're now coming off in the third. I switched over because at one point I had considered that this had the possibility of being intermediate wave 3 with us being in an intermediate 4th wave. And to tell you the truth, back burner is where it's still sitting, because I cannot say, well, it's not going to happen. And I'll discuss that in just a moment. So to update, I'm working on the premise that this actually only completed minor wave 1 of intermediate wave 3, which does suggest that wave 3 in its entirety is going to go much deeper than I may have originally thought, which does not necessarily push deeper my end support levels, where I believe that primary wave C can complete. Those basically going to stay the same, but the third wave is truly going to be on an intermediate degree, a third wave. It is going to go. Right now it is, right down to where that label of minor 1 is, it is still the longest wave right now. And I measured it out, so I know for certain that wave 3 would not have been the shortest wave. But in facing what the market, I believe, is going to be facing, in the beginning, we're going to start to see the earnings reports, and they should be coming out end of the week and then into next week. And first up again are going to be the banks. And it's got to be the health of the banks, right? Because they're not just a bank holding our money. They're in there trading our money. What positions do they have? Where are they long? Where are they short? Et cetera, et cetera, et cetera. So they put them first. And as they say, that so go the banks, so will go, the rest of the market, because it would tell us the health of our quote unquote financial sector. So we got that coming, and that's going to begin. And then also next week, we do have PPI and CPI. And if you remember, this is the last time the CPI came out, mid-September. So here we are in not quite, but almost mid-October. And we have CPI again. I can't imagine, because I've gone to the grocery store and I've gone and bought gas, that we're going to see an improvement. We may see an additional jump in the core, which is where it affects us. And the core is energy and food. So there you sit. So we have that coming out on Wednesday and Thursday of next week. We've just opened here in Globex, and we are continuing to move lower. So let's get back to how I'm viewing this. Again, I'm on the daily. So we have intermediate 1, intermediate wave 2, minor 1, minor 2. I'm feeling very strong, depending on whatever the degree is. It's either minor 1 and minor 2, or I can go to where this would be A and this would be B, of possibly minor 2. But we still have that possibility I'm going to take it down. Let's go right down to that hourly chart and open this up. How about that? We can have this possibility that if this is complete, and excuse me, if this is not, and this is actually ABCA, and this is going to be a B wave, and it could be. I'll tell you what I do again for those that are more recent to watching my work or viewing my stuff, that when it's difficult to kind of read what's actually going on in terms of the decline and a rally, I will switch over and go to a line chart. And the line chart is basically more on a close basis at the hour. So it takes some of the, well, it takes the extremes that you'll see on the candlestick chart out, which we had here, and I think we had here. Or this one, this actually, yeah, it did. This, when we go over to just our candle chart, boom, that was the release on Thursday of the numbers, and this was the release. And so it did the same thing. It zipped up. They had to have it. And Thursday was jobless claims. And then they rejected it, of course. So, but we need to take into consideration that when I put it back over to the line chart, gone. So it's easier to read it as if this is a 2, but even if we're saying ABC and this is an A and this is going to be a B, then we're still counting 3 waves down, and this would be A, B, and then we're starting again. 1, 2, 1, 2, 3, 4, 5, a 3, 4, 5. And we can, and so as long as we stay above 10,090, 10,009, no, that's the wrong one. It's going to be, oh yes, 10,890.91. Then we stand the possibility that the market could do a halt and then suddenly decide to reverse and to fulfill and go and do its C wave to complete minor wave 2. So there is that possibility. In my heart of hearts right now, I would say no, because I think the situation that just kind of rolls around the globe is none of it is resolved. And there was another story out that I read that was talking about margin calls in the UK or in Europe due to what's happening in their bond markets. So, and here's one other thing for tomorrow, by the way. It is a federal holiday. It is Columbus Day, aka Indigenous Peoples Day. And therefore, the bond markets are closed, the federal offices are closed, but the equity markets and the futures markets are open. Obviously, we're watching. So, but we can anticipate there's a possibility of having much softer volume, so lighter volume, and that could add to the volatility. So we'll just keep watching. We'll keep that all in mind. So anyway, so as we're coming down here, 1, 2, and then again, we're going to have to think this is 1, 2, and we're coming off now in the third. And if that's the case, we're doing quite well in terms of working out that first 5 down of the 3 of 3. So again, these patterns are going to repeat. And so we can't get too far in front. We have to allow these moves and these waves to develop and to come in, because that's the only way we're going to know. What I can share and what I do attempt to share is, well, this is what I look for. And when I see it, and also what I mean by that is, like I was talking on Thursday, I said, if tomorrow, if they don't like that number, it's going to go and it's just going to drop, because of the energy that was sitting there of people that were along believing the other narrative or just trying to hedge the other narrative, I suppose. We'll give them the benefit of the doubt. But as soon as you saw it, it was tradable, and you just went out and sold it. And in that initial drop, quickly made money. And you're not the only one doing it. So you get a whole bunch of traders that see it and they react. And it just keeps going anyway. So what I would be looking here now is that if we're going to turn and go up, they're going to have to fall in love with something, because in essence, that C wave of minor two. So what I'd be saying is I'm looking at the scenario. If minor wave 2 is not complete and I have to move it, where can that minor wave 2 go? Well, first thing I'm going to do is I'll throw up some fibs, and that's going on the basis that the current low is in. So that's it. And then we start to rally from here. Just to give you an idea, doesn't mean it's what's going to happen, but it gives you an idea of what this wave has to do. If the market's going to hold these levels and turn and put in a C wave up to complete this minor wave 2, then we're looking for this thing to get it back above 11,732 or whatever the high was, 11,700. I think we got up to 711 at some point. No, I got up to 726 over here. 711 there. 21, excuse me. So here we are. So you'd be looking at that. And then you get that C wave down. Then we get that next. Then, excuse me, not a C wave down. There's a C wave up, and then we drop again into that third wave. Now, this, in my opinion, is likely where that minor 2 completed. I do see additional downside. And my apologies. This is Fleet Week here in San Francisco, and I live dead center in the city, and that was just the Blue Angels flying over my house. So please allow me that interruption and salute the Navy. Back to the markets. In any case, I think that if it's wave 3, we should just keep going, and we should break down, and we should just continue to move lower. Thin volume may aggravate that move or provide strength for the move to go down. If we have way more sellers than the buyers are willing to step in, and there's not that much trading in options that get a hedge via the buy side, then it'll be interesting. So in any case, I think that we should continue to move lower. So now what I want to do is back out again, and let's start putting in the other. Oh, I didn't want that. I want this one. The other side in terms of the intermediate third wave, and then we'll go into the minor third wave. So the first one I'm going to do is that intermediate third wave. And we're going to go from this, from here to here. No, right, that one. To here, that one. No. Forgive me, but I'm a perfectionist. And I just got to open it up. There. To there. To there. Much better. Okay, and then I'm also going to put in the next, which would be the minor third. Again, if that's the end of minor 2. And those go from the top of 2 down to the bottom of 1 to the top of wave 2. Yes, it did. All right. So now allow me to go back down to the hourly chart, and let's start filling in the blanks. What could we really start to look for? We're looking in the minor third of the intermediate third. How much damage can we do? Well, 100%, where minor wave 1 would be equal to minor wave 3, would be at 96.41. This is third, longest, strongest, so I should be looking for more. Again, we're always going to have to make exceptions. This hopefully is not going to be one of them. So next up, we'd be looking for 91.40, 91.50, 88.40 in there. And we actually can look down to 83.50. Then get a little bit of a minor fourth wave rally, a fifth wave drop that completes the intermediate third. We get an intermediate 4 and intermediate 5. So longer term continues to point down below into here. So these levels. And that kind of remains the case right now. Now, can I tell you the path? Well, I can guide it down, but it's the market that's going to tell us the path. So I will just give you estimates based on Fibonacci and Elliott wave. Now, for tomorrow, again, could be thin. We could see some covering in different places. But if the strength is to the downside, there still may be pockets of buying, but I always have to relate that to it's likely going to be in response to selling premium in something, and it's likely going to be selling it in the calls of all the underlying and also within the indexes. And then that your hedge on that is to buy delta. You're short delta, you need to buy the delta. That's buying the underlying, number one. So another reason would be they're in there buying puts because they see it going much further. And again, the hedge there is you buy the put, you buy the underlying. So that is where we could see pockets of buying or support coming in just for these indexes, not necessarily for support of the market we're turning bullish, just because of the activity that's happening in a lot of other areas, a lot of other places. Okay, so coming off now, we have support at 10,931, 932, put it up 935 to 930 or even lower, but a break there. Now I'm going to stick to my insights of the minor. This is for the intermediate. I'm sticking to the minor now. So 382, if a clean break comes there, you may find support there, but here's where I think the strongest support then comes in, 10,685. Now, if this completes this particular, we definitely need to break 10,870. It's actually, what was it? Right there. Let me get right on it. 10,890.75. So 10,891. We definitely should be breaking that within the context of the wave that we're in. For sure, be breaking that within the context of the wave. So at some point that's out, and then we're heading down another 300 from there, and that will bring us into, first of all, I think that will be taken out on its way to breaking that. But it may provide a pause. And in fact, it may finish something within this breakdown inside this wave. For all I know, folks, this is just one of three. So we got a lot going on. And then we have that support at 10,685. Below that, again, I'm walking away, not walking away, but I'm leaving these for the intermediate third and going back to where those minors go. Because the minor, if we're using this count, it's really expanding this downward much more. But it can work. So we then, if we start breaking below 618 is 10,435-ish. Then we have 10,257, and then we have 10,088. Getting into these areas, I feel, is not out of the picture. Now that's 1,000 points from there. So maybe down here is where the minor third completes. Right now, we're still on the internal third, within the third, and maybe that's what completes in here somewhere. Then we do a 4 and a 5, and that completes this minor third, which comes in down here. I'm just eyeballing, folks. But these are possibilities, and we're trading at 11,045. So we still have 10,890 to get below. And that's just basically, not too far from where we are. Now, RSI, we're getting a little bit oversold. And that could produce a little fourth wave. Maybe we do get down here. Maybe we do get down here quickly, and then we bounce. And everybody think it's over, and that'll be fine. But remember, it's not, because nothing's changing. But the market will ebb and flow. It will ebb and flow. Now, I'm going to switch over to the S&P real quick here. Same story. Now, let me go up and put in the additional fibs that we want to take a look at. The first one being the intermediate wave 3. Oops, that's not going to work. So I'll go over there, and I'm going to go back over here. Come on. There. Good. When you get older, your eyes go. So you got to use something where you can actually see it. So that would be for the intermediate 3, which I already know is going to be the extended, and it's going to go pretty far. And then I have to go in and rechange so I can rerun those by adding 200%. I got 1.618, 1.70, and then I need to put in 2, which is already there, and then I need 2.382, which is already there, but then I got to shift to 2. And this is really driving this thing pretty low and still keeping it above 3,000, by the way. So wave 3 is going to be pretty big under this particular count. So what we have is for the intermediate 3rd. And we've already just discussed, it has potential. It has a lot of potential of getting much closer to this than getting above that actually right now. Okay, so now let's add for the minor 3rd wave. So we're going to go from the top of intermediate wave 2, or the start of minor wave 1, to the bottom of minor wave 1, to the top of minor 2. So in there, where do we start to overlap? Well, we got some overlap at 34.56. Again, I'm not really going to look at it that way, but now from where we are, we have 35.89. Here's the ticket that we're looking for this to break. As a minor 3rd wave, absolutely looking for this break. And that would be at 35.72, 35.71, current low that we saw last week. Okay, so that being broken, where can it go? Well, it might stop at 35.89 and then take another peek at something at 35.61. But actually, when it breaks 89, it should then easily break the 71 number and get itself down to 35.18-ish. Then we've got 34.57, 34.50, and then we have 3400 and 33.45. Now we're coming into the 200, and right there is where minor 3 equals minor 1, and that's only 32.16. So if I had to look at the whole minor 3, we can come in, or the whole intermediate, we can come in 31.17 or below. But down in here, we're starting to take a look at those March of 2020 lows. We're not that far in terms of when you look at it on this basis. When you're looking at it trading wise, it's really far. It's a lot of money. It's a great deal of money between there and 2,800. 800 S&P points, but it's worth $50 a point. Add the zeros. It's a lot of money. Okay, so moving average wise, everything seems to be percolating right at the same gate now. We saw during that rally, it was a pretty strong rally off of that low, and they ran it pretty quick and they ran it pretty strong, and it turned everything. But then you can see how quickly it turned back. A little spaghetti here on the 4-hour chart, but still everything is now again pointing lower. And of course, the 200 just went, okay, we went flat, now we're heading lower again, which they are. The 50s had to actually crest and turn, which they are. The 8 and the 4 and the 20 all turned and pointing strong lower. But here again in the S&P, as in similar as to the NASDAQ, we're kind of moving into an oversold. Hourly, 4-hourly, okay. A 1 day, one little small wave up will lift that and give us enough room to continue lower. Also, bear in mind, technical will often lose to reality when things turn sour. So you can always buy on the hope. And a lot of people buy on the hope, and because we don't have any evidence to the contrary at that particular moment, it'll go a little bit. But reality, in terms of when the direction of the market comes back in, because now we have the evidence via employment data, via jobless claims, via et cetera, et cetera. S&P as well is now all those component stocks, of which all the banks sit within this index, are front and center. So Right now, they're kind of coming in and they're continuing to sell it, and it's not anything less than what I did expect. So we have our support levels. Again, if this thing is going to go higher, boy, it's got to come up with something really strong. Really strong. Even if it's temporary, it has to be strong. Strong enough to turn things around and run 200 points. All right, I am going to leave it there. And our next update will be on Monday, October the 10th.